Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Friday, March 25th, 7:30 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures. Oil down about 2%. Oil had a bad reaction on the fact that the EU and the U.S. couldn't come to terms on sanctioning more oil out of Russia. Equities are more or less flat as a pancake. Gold down about 0.5%. Bitcoin up 1%. Not a lot on the macro front today. University of Michigan consumer sentiment and pending home sales. Nothing on the earnings front of particular interest. So let's get into the charts real quick. Reviewing where we're at on the oscillators. I thought with all the bullish action we'd be up a lot higher than we are. Right at about 50 on the New York and on the NASDAQ. I'm not going to go to the chart, but we're running right at 60. So top of the range. The rubber band is extended. Just be careful with your positioning and knowing that that could snap back at any time. I'm still bullish in general through next Thursday, which is the end of the quarter. And then, we'll see as we talk about that next week. And just as a reminder, take a careful look today, not only because it's Friday, for any options expirations that you may have today. Make sure you take care of business. Do a careful review of all your positions so you don't get any rude surprises tomorrow morning with a zillion shares that you didn't want. Also, heading into a weekend again with the market very susceptible to headline risk. Take a careful look at what you want to carry into the weekend as far as over weekend risk, and also it'll be a good read on sentiment from the market, how traders approach going into the bell. Those last 2 hours of trading on a Friday are really important. So moving along, they just keep crushing the VIX. I remain of the belief that you can get intraday clues watching the VIX on your dashboard. So watch for a trend heading into the weekend. Looking at SPY, the bulls are definitely in control. Yesterday, this was Tuesday, big up day, came up to 450. The bears took it down, and I'm sure there were some bears there that were looking for follow through to the downside. And what essentially happened is the bulls trapped all these guys with a gap up and then right back up to the top here at 450. And you'll see we've got the fibs here. So our next big fib level is a 618 coming in at 453, and then we've got some intermediate levels of resistance above here like 456, and then we've got a gap above that's yet to fill. Moving on to the 2 hour, you can see this was the action on Wednesday, and I didn't draw it in here, but you can see the gap up, the gap and go yesterday. So now today, I think it's real simple. North of 450, you can be bullish and see how far it can go. You can see in this chart that there's not a lot of, we've got a little void here in the profile, and not a lot of trading has happened in this zone here up to 456. So I think the door is definitely open. If the bulls want to ram it home on a Friday, into the weekend, I think it's definitely available from a a structure point of view. Looking at this 2-hour chart, there's not a lot between here and there. So 450 is a great line. You've got a high here and a high here, so you got two highs right there. And we'll just see how it goes. Nothing really to add here on this chart, other than yesterday when we gapped higher. If you were on the trigger, I mean, you had an opportunity there from the standpoint of the opening gap high, the gap higher, and then we never broke the low of that opening gap, so that would have given you a chance to get long. Qs. Significant technical event yesterday. Why? We were sandwiched in between the 50 and the 200. We took out the 200, which is positive, and now we're right here at I've got it covered up, but there's a high volume over price bar right here at 360, and that's going to serve as a very nice pivot point from the standpoint you get above 360. You've got a little void here in the chart, and then you've got a gap up here to fill. Keep aware of your fib retracements. We've got that 50% right here at 361, and then we've got the 618 at 371, and really if we can clear that 361.40, the 371.50 up here at the 618 would be on a fill of this gap here. You can see it nice and clearly here. You've got this high volume over price bar here, and then it falls off significantly the higher up you go. So I would just use 360 this morning. If you get a pullback into 357.50, you can take a shot there because you've got this prior high here that should act as support along with this large volume over price bar. 30-minute chart, not a lot of extra value here, but it does give you a magnifying glass on the price action and where the profiles are. You can see right here, I should have moved this up. You can move this up to 360 right there at the top of this volume profile, and then you can see the sharp drop off above. So like I say, is a lot like SPY in the sense that you break above 360 and you're able to hold it. Not a ton of resistance up here to offer much resistance on the way up towards 365, 366 if they want to take it there. IWM wrestling with the top of this big range as we've been talking about for days. We are above the fast moving averages, the 8, the 20, and the 50. We have broken above the downtrend line off of the highs. What looms above is the 1-year resistance at 210, and we've got the 200-day coming in, and then we've got a gap above. So still a lot of work to do on IWM. Here you can see that resolution. I would just use yesterday's close as the pivot and then look for a move up to 208. And then that's really been where the problem has been during this whole time. Reject 208, reject 208, reject 208. So, if it can pop above 208 and actually hold it, then, I think you pretty much got 210 in the bag. And, if they're going to, keep running this thing higher, once you get above 210, then that checks off more technical hurdles for the bulls. Here you can see 206 is a great pivot for today. That opens up 207.50. Here's your high at 208, and then you've got that 1 year resistance at 210. Facebook, nice day yesterday, 2.6%. We've got this large volume over price profile here. You've got a ledge at 222. I think you would probably, if the market's strong, you're going to come up here and test that 222. And if you get a breakout, then I think you can get to 226 on that move up towards the top of this channel. And you may get a little check back there, but then notice you've got another void in the chart that opens up towards 234. I want to just go ahead and show you the daily chart because we had talked about this. What we're working on is a kickback rally towards the 38% fib and the declining 50-day moving average. So we're on that V bottom, and then a real test for sustainability if the rebound has legs will be a test of the 50 and then a test at 248 where the bottom of this big gap lies. That'll be big resistance there. Apple had a really, really nice day yesterday and actually offered some places to get in. You can see the reach back candle out of the gate to back touch the low of Wednesday was never violated. That gave you a nice opportunity to get long at that level, and then came right up here and hesitated at this 170, 150, 172 area, and then once it broke above, then it was gone. And then 173 really opened up the door for a potential run to 176 today. And so if for any reason you get a reach back towards 173, I would expect that to hold, and then you can get long and see if you get a re-ramp into 176. But real strong price action there in Apple. Tesla, we have been keying off this 1,000. It did get above and hold, so now that's your clear pivot on Tesla. As long as it can hold 1,000, I think you're in good shape. And what you would be looking for is a move to like this 1090 type area, midpoint of this range. And what you might see, and it really wouldn't be a bad thing, is some consolidation above 1,000. That's always a good sign. Sometimes you get it below. We talked about that yesterday, below resistance. But a lot of times, even when you break above, you'll get some consolidation above resistance, which is even better because then you've got a line you can shoot against on the long side. Microsoft offered a few opportunities yesterday, very much like Apple. When it opened, it tested the lows of Wednesday, and you'd have to pull up a 5-minute chart to see if it actually broke below, but The point is, then when it broke back above a red to green, then that was a buy signal. But even if you missed that, we had talked about 301 as being a pivot point, and you got the break of 301. It kind of languished there for a while, but then you got a nice closing bar. So good for at least $3, depending on when you got in. Now today, 305 is your key pivot, and that's really the one of the most important ones on the chart for Microsoft, because this was the big breakout level from before. The level above 305, that was a real positive move. Back here in October, we went up, made a triple top high, and then that was a real warning sign once we broke back below 305. When that failed, that was not a good thing. But now we are back up to that level, and then a break above 305 would be very bullish. I do have the fib retracements already dropped in here, and you can see there's a 50% level. Let's call it 309, and then the 618 is up at 317.50. So you've got some intermediate fib levels there, but I think the whole key is first things first, breaking above 305 and holding it. And I think trying to get in the head of longer swing traders, that's going to be a key level, just for the reasons that we've talked about. Recapturing the main breakout level from before is going to be a huge pivot on the charts for people that want to take a long-term view on Microsoft. Amazon kind of took the day off, but there was actually a trade to make. Why? It reached back. I think, we had a bad opening bar. It opened up, up here, came down, gave you that hammer candle, and you had to be on your toes. That reach down candle came back to the lows of the other day, but never broke them. So that was an objective place to take a shot. We also said key everything off of the 200, 32.27. So when you were coming back up, when you crossed back above the 200 and that was recaptured, 32.27, that was a buy signal, and then you closed at 32.72. So you're back to the free 50 club, right? So you got long on the recapture of the 200, and then it added $50 into the close. So today, I think you just use yesterday's close as a pivot, and then look for a move back up to the prior high, and then just use the 200 again as a key level on the way back down. On any kind of down move, you'd want to have that 32.27 hold. Google, nice day. You can see the reach back candle right here, reached back to the prior day's close, but didn't break it, and then went straight up from there. I think you can use this 2800 as a big pivot on the Google chart. I think you got room up to 2870 up here on this high volume bar before you're going to run into a bunch of traffic. Netflix took the day off, nothing. You've got a nice pivot here right at 375. I think north of that you can be long. south of it, probably coming back to 370. Big day for semiconductors. NVIDIA was the star of the show. I know some of you trade that actively. I don't have the chart of it here, but and remember that if you were going to trade SMH, it pays to know the components within it that are, your large components. Intel did well yesterday. Some of us were watching AMD. A lot of people were watching NVIDIA. If you know the big chip makers and you're interested in trading SMH, and you see that those names are starting to go, SMH is going to go right along with them. So yesterday there was a gap and go. And so here was the low on Wednesday. It gapped up and never looked back. And you can say, well, that's a little tough to expect someone to get that. If you're a trader and you didn't get that, remember what we always say: look for your next opportunity. Don't get frustrated and let that ruin your whole day. We said all along that 270 was the key level on the chart, right? You remember that. 270 was the key pivot. And you also see here that above 270, the resistance falls away. This is the old trading area. This is the value range. This is the volume over price profile. That kind of keys in on 270. And we've also got that marked on the daily chart. So you recapture 270 from below. That's a long, right? So you get long, and it never gave you any reason to doubt it the rest of the day. So you got 270 to 276. That's $6 in 5 hours. That's not a bad afternoon of work. So if you get frustrated or you don't get the perfect entry, set that aside. Look forward, look for the next best opportunity, and then take advantage of it. And don't let your mindset get astray. That would prevent you from taking that 270 entry. So now today we've got a little gap above from 276 up towards 279.50. So if there's going to be a flash finish to the week, look for a gap fill and a move higher. Here's the here's the daily chart, and here's that big 270 line that we've been talking about. The next big level on the daily chart is 280, and I don't have the you can see it here, but the gap is not drawn in. So I would say the target for today is a gap fill and a move up to 280, and then that'll be a big level on the chart, because up above there's really nothing there to stop it from going up to 290. Yesterday, steel was absolutely ripping. ATI was a trade idea from a couple weeks ago. It hasn't been setting the world on fire, but 7% this week ain't all bad. Let's look at some other ones. We had talked about Cliffs. Big move this week, 19%. We had this alarmed here. I hope you got it. If you have, just stay long. I want to show you the monthly chart on Cliffs, because it's real interesting on some of these charts. We are moving towards and taking out levels that haven't been seen for literally close to a decade. You can see that cliffs used to be back in at the end of the last commodity super cycle. Cliffs topped out at about $100. Then we had the big recession and then popped right back up to $85. And right here, we are still in the low 30s. We start taking out these levels there, we're up in thin air with not a lot stopping it from a technical standpoint. So let's look at some other ones. Steel Dynamics we talked about. It's off to the races. One we haven't talked about that I want to show you is TX. It's up also 8% for the week, but it's got a nice little technical structure that I think is still viable, at a reasonable level. Just breaking out of the downtrend line, you can see that it just broke above this volume over price resistance. So I think here, if you can handle, a couple dollars of heat to the downside, you can establish a long in TX at a reasonable level. And, birds of a feather flock together. I think TX, even though it's not as, popular a name as Cliffs or U.S. Steel, it's going to go with the group. Speaking of U.S. Steel, let's look at the weekly there. We had this level alarmed a couple of weeks ago. I hope you're in the category. The other ones would be Vale on iron ore, BHP iron ore, Rio iron ore, and Nucor NUE in the sector. So resources are doing really, really well. I sent you a notice on Lithium America. We had this alarmed a few weeks ago. A lot of us got long with April 30 calls. Made a big move yesterday, up, up 8% yesterday? Seemed like it was more than that. So I rolled late in the day. I closed my 30s, and then now I'm in April 35s, just to let you know on that one. And then, I know what it was. It was MP. Yeah, we got the big breakout. I didn't even look for news or anything, but it was up 13%. What I did, we were in April 55 calls. So I sent out that note. You almost have to do something when you're up that much in a single day. So what I did was close out the 55s, and then I bought April 60s. So we'll see. I'm sure this will consolidate a little bit, but still wanted to stay long. Got those, pretty affordably. But after a move like that, you gotta either spread it, take it off, roll up, do something to protect that win. So anyways, the resource trade has been going really, really well. And, really, tech has been going well also. One thing I do want to show you here is I'm still short home builders in the May 60-50 put spread. At this point, it's not that I have so much of it, but, it's a hedge. have something on the short side to go along with all these longs. But let's just review our principles as we come to the close here. Friday, just check all your positions. Make sure the exposure is where you want it to be heading into the weekend. And also, while we're on this bull run, don't become complacent. Keep rolling up. Keep, booking those profits. And we don't know whether it's going to come Monday or, April Fool's Day, next Friday when the quarter's closed and everybody can send out their quarterly statements that, hey, look, what bear market? There's no problem here. Send those statements out, and then Friday they pull the rug. That this rally is going to get checked back, and you don't want to be sitting there with massive embedded gains in your options. Make sure you roll up and then keep booking those profits, and then you're going to feel real good when that check back comes and you don't have as much exposure on your options as you would have had being deep in the money. So don't become complacent with that, especially heading into a weekend. Anything could happen. So I hope you guys have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.